Now is the opportune moment to prepare for the next phase of the bull market. Today, I'll delve into precisely what I anticipate unfolding, as I'm already discerning early indicators and fissures in the current landscape. Expect some remarkable surges as the bull market progresses. Stick with me as I guide you through my expectations, enabling you to position yourself strategically and potentially capitalize on lucrative opportunities. Welcome back, everyone. I'm Chris, your go-to for daily cryptocurrency insights, equipping you with the knowledge to thrive in this market. If you're new here, hit subscribe and ring the bell now. Let's start by examining Bitcoin's shorter time frames. Currently, we're hovering around the $68,500 mark, supported by my orange line. This level is crucial for maintaining Bitcoin's price stability. While Bitcoin is holding steady here, there are pivotal developments we must anticipate to seize lucrative opportunities later in the year. I've been consistently predicting that Bitcoin will trend sideways with a slight upward trajectory for the foreseeable future. However, I'm now detecting signs that will propel us to higher price levels. First, let's discuss Ethereum. After experiencing a significant rally and finding support multiple times at my orange line around $3,677, Ethereum is embarking on another upward trajectory. This surge is primarily driven by anticipation surrounding the launch of spot Ethereum ETFs. This development is noteworthy because it emerged unexpectedly, spurred by rumors regarding the Biden administration's influence on the SEC. The SEC made a sudden 180-degree turn, swiftly approving Ethereum ETFs after months of speculation. Unlike the anticipated approval of Bitcoin ETFs, Ethereum providers had limited time to accumulate assets. This abrupt approval led to a different market dynamic. With the Bitcoin ETF, investors bought the rumor and accumulated assets from October 16th until its eventual approval in January, driving up the price by 86%. However, once approved, profit-taking ensued, demonstrating the short-term effects of such events. Nevertheless, Ethereum's scenario differs. With less time for accumulation, providers are expected to slowly acquire Ethereum, potentially reducing immediate profit-taking. This aligns with my view that Ethereum, buoyed by the Ethereum ETF approval, will experience substantial gains, benefiting altcoins as well. The declining Bitcoin dominance, marked by breaking long-term trend lines, signals a favorable environment for altcoins. I anticipate a surge in activity post-summer, with Ethereum leading the charge. Unlike Bitcoin, which has outgrown retail interest, Ethereum's potential gains could attract a broader audience, potentially lifting its price significantly, making a cycle target of $150,000 for Bitcoin seem conservative. Prepare to be astonished, because while Bitcoin may amaze, it's the altcoins that will truly dazzle. Many of the altcoins we've discussed and accumulated have already skyrocketed by factors of 10, 20, even 50 in this cycle. This is a crucial observation because as Ethereum and other altcoins surge, the trend indicates a downward trajectory on the daily time frame, potentially attracting retail investors and triggering FOMO-induced pumps. At the peak, we can capitalize on profits and await the next big opportunities. Amidst this excitement, I'll continue to provide updates and utilize my trading strategies, which have already proven lucrative. However, let's not forget the significance for traditional markets. On the weekly time frame, traditional markets are poised just below a critical trend line at 5,333. Breaking through this point, while not necessarily immediate, would reinforce market confidence, fostering liquidity and supporting my thesis of a summer surge. Conversely, a rejection could temper this outlook. Furthermore, market expectations, as indicated by the next Fed meeting and the year's end, suggest only one rate cut, reinforcing the potential for market stability and growth. So, while uncertainties persist, the stage is set for an exciting journey ahead. Looking back at the beginning of the year, market expectations lean towards 3 or 4 rate cuts. The prevailing pessimism suggests that any rate cuts by the Fed will catch the market off guard, triggering FOMO and fueling asset pumps. This sets the stage for a perfect storm of catalysts. However, it's essential to acknowledge potential setbacks, such as a significant market drop or adverse events, which could dampen the thesis to some extent. Nonetheless, the likelihood of a liquidity event, akin to the pandemic-induced money printing spree, remains high, potentially amplifying gains across the board. Keep an eye on key events this week, particularly April's PC inflation data, which will shed light on inflation concerns. Predictions abound, with some suggesting a $4,500 Ethereum once spot Ethereum goes live. Crypto's mainstream adoption is evident, with 20% of the U.S. adult population owning crypto by 2023, attracting attention from political figures like Biden and Trump. As everything aligns, it's a waiting game to see if the thesis unfolds as anticipated. In the meantime, prepare by leveraging the best deposit bonuses, with up to $30,000 on Bybit, $660,000 on OKX, and up to $40,000 on BitAT. Sign up using the provided links and be ready to capitalize on the opportunities ahead. Thank you for watching, and I'll catch you in the next one. Hey everyone, Bitcoin had a successful bounce over the weekend, but many are now wondering when the next pump towards a new all-time high might occur. Zooming out on the daily time frame and looking at our anchored VWAP from the ultimate high, we can see that this specific level has been respected with precise accuracy. We experienced a downside push, hit our anchored VWAP, and over the past couple of days, Bitcoin has seen a 5.4% bounce. We've been trading at a significant level throughout the weekend, which was the mid-level of our significant swing channel. Unfortunately, this specific diagonal level is still acting as resistance, aligning nicely with horizontal resistance connecting previous lows. Despite attempts to break this resistance, Bitcoin has been largely unsuccessful so far. Overall, I'm still bullish on Bitcoin. Our exponential moving averages across various time frames signal an uptrend, suggesting higher targets. Looking locally, on the 30-minute time frame, we can identify a horizontal range, with deviations at the top and bottom, but with clear respect for the range boundaries. Given that we entered the range with a pump, there's a higher probability of breaking it to the upside. Bullish divergence on the CVD indicator, coupled with open interest pushing upward, indicates aggressive shorting attempts, but Bitcoin is still forming higher lows. Considering probabilities, we should expect an upside push in the upcoming hours. Additionally, on higher time frame AER stochastic CG oscillator analyses, we're currently trading at the bottom, historically indicating pushes to the upside. This pattern has been consistent throughout Bitcoin's trading within this horizontal range. So, talking about probabilities again, it logically makes sense that we might experience another push towards the upside, perhaps even in the upcoming hours. When we look at the money flow indicator on the weekly time frame, it still shows hidden bullish divergence. A lower low on money flow and a higher low on Bitcoin's price itself, another bullish sign. However, it's crucial to consider what happens if Bitcoin doesn't see an upside push and our bullish scenario fails. Our first area of resistance would be around $68,000, identified on the daily time frame as a new high time frame area of support. Even if we break our horizontal range to the downside, hitting this liquidity level below the previous low and then seeing a push upwards would likely be a deviation similar to what we've seen before. If this support level is broken, the next crucial support would be the bottom of our larger swing channel on the 4-hour time frame, around $66,329 to $66,857. So, if there's no swing failure pattern below the previous low, and our daily support level doesn't hold, this larger channel bottom becomes even more significant. If our plan unfolds as expected and Bitcoin experiences an upside push in the upcoming hours, the critical area of resistance to monitor is the top of our significant descending channel on the 4-hour time frame, approximately at $71,000. This level aligns well with volume levels